Welcome. I'm going to tell you about what is basically a really exciting ground floor opportunity for you. It's a unique chance to buy in at a good price. I can tell you that even I'm going to tell you, in fact, what it means when I say it's a good price for what you're getting. And there should be some value accumulation. You should make some money on it, because you're getting it at a good price. It's a unique chance. This kind of video doesn't come along every day from a guy like me. And a little bit about myself. I have been in the stock investing business and business investing for over 20 years. I've been an adult for about 16 years. So a lot of those years was, you know, actually being grown up and doing the thing. And I've made a bunch of money. I've made millions of dollars. I've made and lost millions of dollars while I was learning too. And I've taken all the lessons and put them into something for you here. The career of an investor, which I am, who's a seriously into it investor like I am, not just a passive investor, as I expect most of you will be or will become. And it can be very exciting. You take all your lessons right to your wallet. So if when you make a mistake, it costs you a lot, and you always remember that. Oh, I lost that money, and I would have so much more money right now if I had done it right. So I'm taking all those lessons I've learned, and I'm going to give them to you so that you can do it right the first time. And so let's begin. We're going to talk briefly here, and you're going to get my point, and you're going to be persuaded that this is the right price, and you're going to put money in there, and you're going to hold the stock, and you're going to know exactly why. And that's what matters, right? That you make the money and that you can justify it to your wife so she doesn't think you're running a drug hustle on the side. When you show up with all those extra thousands of dollars. All right. So the stock that we're invested in here is a little company called Tandy Leather Factory. They have the word factory in the name, and they are actually a distributor and an importer, a wholesaler and an importer. So they don't actually have a factory that produces leather, they're an importer. They are the nation's #1 leather wholesaler. They're great. They're a great company that supports the hobbyists as well as the people who have leather making business for leather products like belts and accessories. Gun holsters are popular items. Um, Hats, jackets, shoes, the moccasins, maybe assless chaps. I don't know. I'm sure there's someone out there making the assless chaps. And then they also but Tandy also supports the actual the industry of the hobbyist. So they have these great educational videos and stuff so they help promote. They market leather working. Basically, they're a leather working marketer, and they sell all sorts of products, leather products, and the hardware, the tools that you need to work with leather. So that's what the company does. And they have around 100 stores around the country of the United States of America. They do somewhere over, in a normal year, it looks like they're doing over $70 million in total sales. And they bring in cash. They Their sales are profitable, and they're a real money maker. So on that 80 million of sales that I foresee, somewhere maybe just shy of 80 million they'll be for 2021. Well, these guys will generate about 10 to 15 million dollars of after-tax cash that will accrue to the company's balance sheet, and being that's our earning. That's what we own. We own that as the investors in the business. So they'll bring in. That's a pretty good profit margin if you look at those numbers, 80 million, and then bring in 10 million cash. If they hit it out of the ballpark and end up with 15 million cash that they take in, that would be super, right? Now, of course, it matters what price you pay for that cash flow. And we'll start with a little comparison in the stock market. So let's see. Tandy, you need to find a company that's kind of like Tandy in a way where, so they don't have a lot of investment. They don't have to replace factory machines or anything. Um, like I mentioned, they're not actually a factory, right? So they have to maintain the stores, and they have a wonderful warehouse that we'll discuss later. And but the warehouse is brand new from 2020. It was opened, and it's in short, it's provided a lot of cost efficiencies. They save on the shipping now because they can get a better deal because they ship a lot from that location. And it's in a great location right in Fort Worth, Texas, which is kind of right in the middle of the country. So that's good. And so these guys are going to produce all that money in profits, and the whole price, and they have no debt, maybe 500,000 in debt, right? So you could say no debt. And they therefore don't have anything to pay off. They have a very simple capital structure. And what that means is basically it's very simple. Like there's stock in the business, and that means it's a simple capital structure. But a lot of these other businesses, you get a piece of stock in Snap, for instance. If you get the Snapchat stock, right? You don't have real stock. They have more than three different categories of stock, and they hide all this from you unless you go and look. But you don't actually own really, you don't own like the business properly when you own those kind of complex capital structures, those fake stocks. You don't really get to own the business, but in Tandy, you actually own that part of the business. There's no second class stock. You're not getting second class citizen stock or anything like that. It's a very simple one stock. That's this business's stock. Okay, so there's no deceit there or hidden dangers as far as that. So as far as having the business taken away from you because you don't actually own anything except for there's Class Z fail son stock, like you do with Snapchat. It's fake ass stock. So it's a real stock. You get real earnings. You're buying real earnings in the real business. You're buying part of a share. You're buying a share in. And the whole business right now, producing, we're forecasting 10 million cash production that they're going to be bringing in. And the whole business only costs 42 million right now, $5 a share. So there's 8,666,000 and change shares outstanding times five. That adds up to that number, 42 million I mentioned. Let's go ahead. $5 a share. Yeah, so 43 million we get there. And that is pretty legit. If they bring in $10 million, you got 43 million that you paid for it. So what divide, so you're getting a 23% what's called an earnings yield in the business. So when you buy this stock, you're getting an earnings yield of 23%. Now, very loosely, you could say that's actually your interest rate that you're getting. So imagine you go to the bank and they're going to pay you 23%, right? Right. Yeah, right. Imagine that in some totally different universe. But the loosest analogy that's commonly known is that this earnings yield, because that's the number of dollars they earn for the price of the business, right? In real estate, this is called the cap rate. And in real estate, you want to look for a 7% cap rate typically. So that would be 7% of 42 million, or 43 million. And so if they earned $3 million and they were a building, and they cost 42 million, They would cost 42 million if they were building, right? But this is actually a business, so people tend to overlook these opportunities. It's actually a business producing $10 million in cash on that 43 million price. So it's a 23% return on investment as far as direct earnings, and the loose analogy with the interest rates and the capital and the cap rates that real estate uses in commercial real estate. So you are you are definitely in the most productive asset possible when you buy a cheap business that's going to be able to continue earning this kind of money. You are buying the most bang for your buck. And so, for instance, a lot of these businesses do end up, and this is kind of why you can get a lot of money quickly in the stock in a good business investment like this, like in Tandy. And I mean quickly, like 3 to 5 years. I always mean long term. I'm a long term business investor, so I'm always looking at that horizon of 3 to 5 years, and preferably 5 years is my standard horizon because I need to see that the business is going to continue earning the $10 million year after year, and these guys, they're definitely going to be earning $10 million year after year or something very near it. They have plenty. They can grow their business. They have no debt, so all the earnings is actually my earnings as the business. Owning shares in the business is actually my earnings. It doesn't actually belong to the bank. And so what does happen is when these businesses like this little hidden gem I discovered that I've been telling you about, the Tandy Leather Factory stock at this price, it's the real hidden gem right now. Um, Okay, but when it's no longer a hidden gem, here's the kind of thing that happens. So here's where the price appreciation happens for us. So we make our big bucks because we were smart and saw this ahead of time, right? So if you look at the stock market nowadays, it's like Microsoft stock, for instance, all these big stocks and stuff. What you're paying for 40 years of earnings. You're paying for a 3% interest yield, right? So if this company was making only 3%, it would be making only $1.29 million. And that's what's happening with these trillion-dollar companies. They're only earning, I say only, but relative to the price of that business per share, that trillion-dollar company is only earning uh, $15 billion after tax, $10 billion after tax. So they're trading at like a 1% earnings yield, even 30 billion after tax. So they're trading at on a $1 trillion company. That's a 3% earnings yield, right? And again, we're looking at 10 million on 43 million right now. So we're looking at 23% earnings yield. So what happens? What happens when this price goes when this stock goes to match the rest of the market, and it goes to 30, 3% earnings yield, and it's making $10 million, right? But it's at a 3% earnings yield. Let's see what that would mean for that price. We're talking about $43 million. That's the 800. That's the 8,666,000 shares times $5 a share, right? That's how you get the price of a good, simple capital structure business like this. 43 million bucks. That's $5 a share, and they're gonna profit that 10 million. They're gonna bring in that 10 million cash, right? That's that earnings yield we're talking about. That's real money they're bringing in, a quarter for every dollar they're earning. So, but if when they go up in price and they become recognized in the market again, okay, they're gonna be earning that 10 million we expect, but it'll be trading for that 3% earnings yield, or we'll say a 5% earnings yield, right? So what is so we'll get when something's trading at a 5% earnings yield, that would be about 20 times the earnings, or the 20 times the interest rate, 20 times the cap rate, right? 20 times the incomes of 10 million. So you would actually end up with a business that's trading not for 43 million, but for $200 million. Okay, so this is where the money comes from. We end up, when this business is recognized by the market, the price it goes up to match what this company deserves because it earns so much money. It's easily a $200 million company, earning at that great profit margin and all that. It's a $200 million company for sure. So what that would mean for the price per share is we just divide that 200 million by that 866 million shares outstanding, right? And so we end up with $23 per share. So we're looking to go from $5 per share to $23 per share here to get to the rest of, to catch up to the rest of the market. And we're just ahead of the curve here. We kind of seen all the data and made this discovery. Hey, Dad, I'm drafting a video. Now you can see where the money comes from. It comes from, we find the hidden asset, which is Tandy Leather Factory stock. We find this business, it's kind of been hidden. The reasons we can get into details a little bit of, but often in the stock market situation, like I mentioned, I've been in the business for a long time. There's no clear reason why a stock is available for a good price sometimes, because you're like, if you know about this business, some business out there, right? It's like, oh, okay, you know this business is like doing great because maybe you work there, and you know they're doing so much greater, that they're on such a trajectory. Like your business, you're in the business, you know it's going gangbusters, crazy, growing, right? But and then you go into the stock market because maybe it's a publicly traded business you're in, and the stock market is valuing your business like in the slums price. Like, are you going to trust that market price of the slums is the right price, or are you going to trust that, you know, from your experience, your knowledge, your in this case we said you're in the business, you know for sure, a concrete fact, it's doing way better than the slums price of the stock? Then are you going to trust yourself and your judgment of it, or are you going to trust the market price and say, oh, you know, the stock is cheap for, you know, and I'm not going to buy a cheap stock. You know, like, yeah, you really, you know, there's people who literally will do that to themselves. Okay, they'll look at the market, you know, they won't trust their own gut feeling or their analysis or their belief, and it's no way to go through life. You so this is how it is. As an experienced stock investor, a business investor as I am, and a stock picker, I see these kinds of situations crop up where all of my information says, yep, this looks just like a lot of other situations where the stock went up in price a whole bunch and the price is low. This is prospecting, right? This is what's going on, and this is what's going on with Tandy. We'll get in all these details. Maybe not, depending on my mood. I can make these videos. Other people might uh, decide to get ahead of me now that I'm open the stage and try to tell their version of why Tandy is what it is and stuff. But it really doesn't matter. The fact is, the business is making a bunch of money, and they're priced like they don't even exist, frankly. And that's perfect for you and me, my friend. That's exactly how I make all my money. Buy low, right, when the business value is great. And that's the kind of situation we're in here. So in this video, we covered what is Tandy Leather Factory, what is the stock, what is the business that this stock represents, that is ownership shares of. So it's a wholesaler, importer, and leather craft support, which they support the whole industry and all the hobbyists. It's a great brand. So we covered what Tandy is. The ticker symbol is $ TLFA. We covered some of the improvements in the business even. So there's even better results coming in the future thanks to these improvements that they just finished with the new warehouse and new shipping costs that are lower, more efficiencies, fewer employees needed at the 100 stores, and faster product to the customer that orders online. Okay, so we see that we know the business, we know the business is even improving. We know the numbers are great, 80 million sales on a $42 million business, and those sales are very profitable and probably pulling in well over 10 million cash a year for the next couple of years. And we understand that relative to other investments, we can see why the earnings potential for us is really high in this particular situation, because we get 10 million of earnings for only 42 million to own that business. And altogether, we then did the math and said, so basically, if this business catches up to the other other stocks in the market, once it's no longer a hidden gem, it should go to about a $200 million valuation for the business. And right now we can buy at a $43 million valuation, which is $5 a share, with that 8,666,000 shares outstanding. And if we can buy at that $5 at $43 million valuation, and we can hold our investment forever, but we can hold in at least until it goes to 200 million valuation, which means that stock price will go from that 5 to that $23.07 here that we have, which would make for a pretty solid return if you get in at the 5, 4.6 times return. That's 460% return. And that's what we covered in this video. That's the opportunity that, as far as I see it. Now, this is not investment advice, but I will tell you what I have. I have all of my money in this business right now because I like to win big. I like to bet big and win big, and I have all my money in it. That's my testimony about the fact. So I hope you enjoyed the video and learned something. If you subscribe or something, I might be coming out with another video where I'll try to give you some more information.